Hey everybody, what's going on? In today's video, we are covering lots of interesting earnings still to be released this week. We'll be taking a look at some important economic data that's coming out this week. Lots of important inflation prints. We've had a little bit of a pullback, but why are people thinking it turns into a crash or a correction? I don't really get that. So we'll take a look at the major indices and see what's up there. We'll look at last week's setups and see if we made any money or not. And we'll look at some new setups as well this week, including Boeing, Boston Scientific, and nVent. By the way, why don't you go ahead and smash that like button for me? We put a lot of work into these videos and it really helps. And if you're wondering who I am, my name is Kevin D. I've been trading for 25 years. I'm a full-time trader and working through the second level of the Certified Market Technician program. If you're wondering why I do this, I work at the investor community and I do these videos every weekend to keep our members up to date on what's going on in the markets and to highlight fresh opportunities. We have a really cool community of like-minded traders and members. Get to see these videos early and also get to take part in live streams and live mentor sessions. So check it out in the link down below in the description. So here's a quick disclaimer. Everything we do here is for educational purposes only. We are not investment advisors, do not provide investment advice. All trading and investment decisions are your own and at your own risk. All right, let's get right into this. So we're going to start by looking at earnings that we've got coming up this week. We start on Monday after the close. We have Palantir. I think people are still interested in this stock. We also have one of the solar companies, Solar Edge. I think that one will be interesting. On Tuesday before the open, maybe people are interested in Coca-Cola. If you've got those big old stable companies in your portfolio like Warren Buffett does, then you'll probably be interested in Coca-Cola. I think Marriott could be interesting. It's one of the first hotel chains to report, and we've seen really interesting results coming out of the airlines and the cruise lines. So this kind of kicks off the week for some interesting hotel chains. And that really gets into gear on Tuesday after the close when we have Airbnb, of course. Also on Tuesday after the close, we have Upstart. Wednesday before the open, Roblox should be interesting. Also, the trade desk will as well. On Wednesday after the close, we have Shopify. I will definitely be interested in that. I have an investment position in Shopify. As you know, most of you know, I'm Canadian, so it's the law in Canada. You have to own some Shopify stock. So that's why I've got some of that. Roku, also after the close on Wednesday. And Cisco should be interesting too. Now on Thursday before the open, I think Datadog is one to watch. And Crocs will definitely be interesting. Funny stock, it's like Crocs can move a ton on their earnings. And I've also seen it just go sideways, just go nowhere on earnings. So that will be really interesting before the open on Thursday. After the close on Thursday, we've got DraftKings. I wonder if they will talk about how they are doing today, with the Super Bowl today as I record this. So be watching out for that in the conference call after they release their earnings. We've also got Applied Materials, one of the semiconductor stocks, to release their earnings on Thursday after the close. And then we have DoorDash. Now, Friday before the open, John Deere. I think this is a big one. I think this is really important this week, and I think this is a really big one for the industrial sector. That sector has been leading for a while, along with energy. And John Deere has been leading that sector. So I think this is really important for the sector and see if its rally can continue. So I will definitely be watching. I don't own John Deere, but I'm definitely keeping an eye on that sector. And so we'll be watching John Deere's earnings before the open on Friday. All right, let's get into our economic data. On Monday, we have nothing. On Tuesday, we have the big one, the CPI, Consumer Price Index, also known as inflation. this is really important. This is the media's favorite inflation measure, not the Fed's, but the media's. And so that means, it should be one of ours. Retail traders be watching this. Anybody who is in the stock market is going to be watching this number on Tuesday before the open. It's really important. And it will probably set the tone for the rest of the week. Also on Tuesday, we have lots of Fed speak. I think there's like 5 of them or something speaking on Tuesday. So they'll probably be talking about the CPI, whichever way it goes. And so that could exacerbate any moves that we see after the print. On Wednesday, we have retail sales, also really important. So, and can change the direction, I think. Important enough that they could change the direction of any, if we do get a move out of CPI. Let's say the CPI, comes in less than expected, inflation's coming down, everybody's happy. But then retail sales are really hot. CPI, presumably then the market would have been rallying on this light CPI number, and a hot retail sales number could stop that in its tracks. Same goes with on Thursday, with the producer price index. This is sort of the inflation at the producer level, at the manufacturing level. And that could also, change or continue any trend that has developed earlier in the week. We also have unemployment claims on Thursday, and no data on Friday. Okay, let's move on to taking a look at the market now. We're going to start with our major indices. We're going to look at some international markets. We'll look at important commodities. We'll look at some sectors, and we'll look at last week's plays and some new setups. We're a little bit light on new setups, but I did find some interesting plays that are definitely worth watching. Okay. Oops, I don't want to go there just yet. We'll get back to this in a bit. What I want to do is look at the daily chart of the S&P 500. Now, you can see that we've had a little pullback. After our really nice rally, we've basically pulled back all week, and it's been a little volatile as well. Thursday especially, big red candle on Thursday, pretty scary. I think this big red candle is why people are saying, oh, we're going into a correction, oh, the market's going to crash. Well, I would maybe point to them that we're due for a pullback. We've had a really nice move up here. I mean, really, from October, if you count this all as one move, right? A little pullback, not surprising at all. We expected it. No big deal. And we're seeing a little bit of strength here on Friday. A little bit of a reversal right at a major support area, just above the 21-day moving average, and didn't even get down to the 382 retracement like I was expecting. Now, we could certainly roll over some more and get down there. And as I'm recording this, the futures market is open, and it's a little bit soft. It's definitely red, pulling back a little bit. But there's still a lot of time to go between now and the open tomorrow. So I'm not too concerned about what I'm seeing here in the future market just yet. But we are seeing a little pullback. So maybe we pull back tomorrow on Monday, break through this 21-day moving average, and then come and test this 382 retracement. If that happens, I'm kind of expecting we could see a bounce there. There's a little bit of price action around that area. We could see some support there. Maybe we pull down a little farther through this support line and come down and test this. Maybe it gets a little panicky, and coming down through the 382 retracement, and then the following day, the CPI comes in a little hot. Well, and that's when we could start looking for this pullback to start getting a little more serious. When we'd come down and test this 50% retracement of this latest rally. And also you can see we've got the downtrend line in there. Now, and we're going to have the 50-day moving average is going to be right there as well. That's a cluster of support. And we should certainly see that act as support if we get down that far. And I'm not saying that's what's going to happen. It's just one of the possibilities that we need to keep in the back of our head, right? I think what's more likely is we may get a little bit of a bounce. But I think on Monday, it's the most likely outcome is we chop around, unless there's some leak of CPI data or something like that. I think we chop around. It's indecisive on Monday, and then if the CPI comes in favorably on Tuesday, then we rally right back up again. And as long as this other data is okay, we could get right out above to new highs by the end of the week. Quite easily do that. So let's take a look at the Qs. Now the Qs were a little more indecisive than the S&P 500 on Friday. They had a little bit more of a serious pullback. You can see they've closed this gap. I can get rid of that now. But they did find support, or closed right on this major support level. Haven't come down and tested that 382 level or the 21-day moving average either. This is a setup for a bounce. It's also a bit of a setup for continued move lower. IWM, this had a bit more of a serious pullback, but IWM, you have to remember, had run a lot farther than the other indices. So that it pulls back a little more, that's fine. We had a bit of a messy bull flag there, and you can see we broke down out of the bottom of that, but we did find some support at the 21-day moving average. We found support just slightly above the 382 retracement, and also where there's a major support level. Exactly what's supposed to happen, technically well behaved, but would like to see this move up tomorrow on Monday and keep going. All right, one of the things that gives me hope and is definitely a bullish sign is this price action on the VIX from Friday. So you can see the VIX was pretty much going up most of the week, especially on Thursday. Big green candle in the VIX on Thursday. It stalled out right at the 50-day moving average. Okay, good. That's what we would want to see. But then on Friday, opened, went way up, and then pulled back. And you see where we came up to. Hey, we came up to these two highs right here. Well, those two highs are pretty much equal with the apex of this pennant formation that it broke down out of. We often see and should prepare ourselves for a retracement back up to the apex of that triangle. Sure enough, that's exactly what happened. And then the other thing that we do want to see happen, if this is a real breakdown out of that triangle, we want to see price fail at that level and pull back in. Exactly what happened. Technically very well behaved here. This bodes well for equities going higher. However, the 10-year yield moved up all week fairly strongly and broke through the downtrend line, has closed above it, has stalled at the 100-day moving average, so that's good. But, this is looking fairly strong, looking like it wants to go higher. And the markets have been moving inverse to this. So as this goes up, we should, expect that relationship to continue and the market to pull back. So I think this continues to go a little higher, but CPI print will definitely change everything in this. This is going to be very dependent on the CPI print. Let's take a look at the dollar index and see if we can find anything bullish for equities here. Now, we broke down through major support a while ago, through a major uptrend line. You can see, how far this goes back. That's a really important uptrend line, and this is a really important, what was a support level, now a resistance level. Both of those lines acting as resistance. The 50-day moving average acting as resistance here. So we have this cluster of resistance. It would have been nice to see this just roll right over when it hit that, rather than it going sideways, because this is starting to look like kind of a nice bull flag, right? Altogether here, this could be a very nice reversal pattern, especially if this were to break to the upside. We don't want to see that, though, because the dollar index has been moving inverse to equities markets, global equities markets especially. So we want to see this roll over. We do not want to see this break to the upside. So jury's out on there. If you start to see this having a strong day, to the upside out of here, I would really be careful on the long side of your equities. Let's take a look at our DCA timing tool. All systems go here in all of the major indices. You can see it's looking, all nice and green still in the S&P 500, nice and green still in the Qs, and nice and green still in, why isn't that changing? Nice and green still in the Qs and the IWM. So all good there. Let's take a look at our global ETFs. We'll start with Europe, Australia, and developed Far East. A little bit of weakness here, a little sideways, more volatility than we had, right? When we had, we came up here, we had a really nice run. Consolidates a little bit, that's fine. Then we can see when we tried to break out of that consolidation and that failed, and we've been fairly volatile since. But we're still kind of holding up here at support. We've got the 21-day moving average there, so not looking too bad, but this does threaten to roll right over. So watch out for that. Watch out for weakness internationally. Let's take a look at the emerging markets ETF. You can see that has rolled over more so, but it looks like it's trying to find support here. Watch out for these lows in this 50-day moving average in this one. Let's take a look at FXI, which is Chinese large cap stocks, and you can see that this is definitely weaker over the last couple of weeks, and weaker in that those two lows that I pointed out in EM, it's already broken down below those, and it's just now sitting right on its 50-day moving average. This looks like it's going to go down farther, continue to close this gap, and maybe we find support on that at the 200-day moving average. Let's take a look at some commodities now. We'll start with gold. So gold, you can see, was really weak and was building this bear flag. Broke out the bottom of that bear flag on Thursday. This little red candle right here, this is because we're futures. Okay, that is today's candle. The futures are open, so this one is today's candle. So we got Thursday's candle here, Friday's candle here. So broke out of there. We expect target on that takes us right down to the 200-day moving average, is about 1785. But we've also should have strong support at about 1800 area on gold. Are we going to come there? There's a lot of levels for this to fall through before it gets there, right? I've got a Fibonacci on here. You can see we were below the 236, but we've got the 382 right down here at 1840, which is also a major support level. So if we lose the 50-day moving average, next spot you're going to look for is around 1840, 1835 in that area. Before we come down even farther to around the 1800 level, which is where you'll find the 50% retracement of that rally. I wouldn't expect it to go down any farther than the 50% retracement. That should definitely act as support in gold. The gold miners, and these might be a better play for you, they are just breaking down now on Friday. From this trend line, this definitely looks like it has more downsides. So this could be an interesting play if you're looking for something on the short side. Silver, not quite as weak in my opinion, lately anyway, as gold. And looking like, it may try and find support here. But again, we're looking at the futures here, and we've got a red candle forming. We had a tiny gap down, and now we're continuing to move down here in silver. So maybe we are going to see more downside out of this. We'll take a look at copper futures, and you can see this support level here is continuing to hold even in at today's open for now. All right, let's look at crude oil. So crude oil is opened on Sunday after Sunday evening here and coming down just a little bit. Nothing serious going on here. Not really surprising considering that we've had a really nice run and we're coming into this resistance area. But we don't want this to pull back too much yet. I'd really like to see this get up to higher in the resistance area and go sideways a bit and then break out higher. A week of consolidating up here would be nice. and finally make that move. It'd be really interesting to see what happens when we get up here. If we get up here and then start moving through, if we get above these, this little group of highs here, I think a lot of people would be caught off guard on that, and it could make a very quick move. So one of the ways you play that, obviously, is with XLE, the energy sector ETF. And you can see that that had a really nice day on Friday. We're still not that far off of all-time highs and looking like it's going to go higher. I skipped over natural gas. We'll go back to that really quickly. Consolidating nicely here at the bottom, really trying to form a bottom pattern. That's good to see. All right, let's look at XOP, which is the oil producers. And you can see that that had a good day on Friday. We've got kind of a downward channel forming here, or possibly a sideways channel. Jury's out on this, right? We're right in the middle of what would be a decision point. Does it break through this downtrend line and then maybe break through the top of that sideways channel? Or do we roll over and continue all the way down through this 130 level and then come down to the bottom of the channel? I hate playing in the middle of the channel, so I'm not touching this one. It's just too indecisive looking for me. On the other hand, if you were wanting to play in the energy space, OIH, the Oil Services ETF, is still looking really strong. With everything that's been happening in this sector and the pullbacks and everything, this has not participated in any of the pullbacks. It had a really good day on Friday and looks primed to break out to new all-time highs. A move to new all-time highs could be a really quick move here. So keep your eye on this one. And, if you're adventurous, this could be a really interesting play. We'll look at TAN, the solar ETF that had a nasty little pullback out of the range that it was in, but it a little bit of a reversal candle tried to form on Friday, right around the 200-day moving average. The reason this pulled back so hard like that is all Enphase, which had just a disastrous response to their earnings. So you can see this giant red candle here. So they had earnings on Tuesday after the close, and they shot up. They were up as much as, I think, 10% or so at one point in the after hours, and opened on Wednesday morning and just completely fell apart. Gave it all back plus some, and then gave more back on Thursday. But it was nice to see, and if you're in this, you should find this a little hopeful that it was, found some support at that pivot, right where it should have, and bounced up a bit. Had a indecisive day though on Friday. Tried to get it back and still found some sellers. Not too surprising. I think that people would have seen this move on Friday as an opportunity to anybody who wanted to get out and hadn't gotten out already. That was kind of their chance, and they definitely took advantage of that. What's good though is you can see that the volume. You had the huge volume on Wednesday. The volume fell off a bit on Thursday, and then again, the selling sort of abated on Friday. So. Best case scenario here for now is to go sideways a little bit, above this support level, and then go back up through this downtrend line and get through there and hold this time. We'll move on to consumer discretionary now. This has pulled back a little bit, after having a really nice rally. It's pulled back a little bit, holding at the 200-day moving average, holding at that support level. But got to get going here, really got to hold here. If this breaks down out of here, I think we're going to go and close this gap and then test probably the 100-day moving average, this area, in about 140. XLI Industrials. So this has kind of got a bit of a messy bull flag going on here. Above support, wouldn't be surprised to see this break to the upside, but watch out for those John Deere earnings on Friday, because that company's big enough to push this ETF around. Financials are looking quite healthy. Have come up, tried to hit some highs here. Pulled back a little bit on Thursday, but bounced off of major support. I would expect to see this go higher. XLK technology. This is still kind of building its base. It was forming a base up here, which was nice to see. It broke down out of that on Friday, but trying to work its way back in. XOC Communications. This one is definitely weak. Remember, this is where Meta is and Google, and of course, a bunch of cable companies and that sort of thing. But this has been very weak, mostly because of Google and partly because of Meta, which we'll get to in a second. But we had this big gap, and obviously that gap is closed now. It's good to see that this is getting some support, or at least this move down stalled at the 21-day moving average, but it's really got to turn up, right? Otherwise, it's coming down and it's testing this this support zone and the 200-day moving average here. But not a healthy break out of this, because we were looking at this as a bull flag, and we have really broken down out the bottom of that. All right, so Meta. Meta was one of our trade setups from last weekend. We were looking at this. Consolidation and the move and this giant gap, and thinking, okay, this is too much. This is overdone. If we start moving back into that gap, it's probably going to move quite quickly down through the gap, and then maybe retest that breakout point. Or maybe, the 21-day moving average. There are support levels in here, so it's not a given that it comes all the way down to the bottom of the gap, but that is a good possibility. So I mentioned that you could either short that up near these highs. That would have been around the 196 level. Well, it never quite got there. It was a couple bucks away. So if you did short up in there, congratulations, you made a really nice, if you were watching in intraday or something and watched that little turn intraday, that would have been a fantastic trade getting in short there, because you can see we've had 3 down days since then. I got short right where I said I was going to. As soon as it broke through 182.50, I bought a bunch of puts. And I got in this really quickly, so I got in right on that number, right on my entry number. I guess I should have probably been paying a little more attention intraday, because there would have been earlier entries in there that I probably should have taken, could have taken. But I'm happy with my entry. I'm happy where they're at now. I wish this had come down a little bit more on Friday. It'd give me more confidence staying in the trade. I think that what I'm going to do is probably, if we get a move, over the next day or two above the high of Friday's candle, I will probably sell my puts, close out the trade there, and take a little bit of profit. But I do want to hang on to this trade, because I think the higher probability is more downside in this. Okay, let's move on to Apple. Of all the FAANGs, I think Apple is looking the healthiest here. It did have the pullback on Thursday like everything else, but it had the nice little reversal, a small reversal candle on Friday, but nonetheless, this is looking pretty healthy to me. Amazon, on the other hand, is not looking healthy. It had quite a pullback. You can see I've got a Fibonacci on this one as well. And whereas the major indices only pulled back to the 236 retracement, or the IWM at 382. Well, Amazon kept going down and even went through the 50% retracement and that support level, but it did bounce a little bit and back up to it. It still looks weak to me though, and I would not be at all surprised if it came down to this 618 or even the 50-day moving average down here. I do think there's a little more downside left in Amazon. Let's move on to Netflix. So there was some weakness in Netflix over the last couple of days that really kind of surprises me. I'm not sure what happened here on Friday. This has got to be news related, but I didn't catch any news on it. But not good the way it's falling out of this nice base it had been building, closed below its 21-day moving average. This really kind of looks like it's going to come down and test this gap, maybe this major support level here. Google, they had a presentation with their AI. Totally blew it. It made an error answering a question, and Google is seriously being punished for that. The irony is, ChatGPT makes mistakes too, and everybody knows it. But I guess people are holding Google to a higher standard, and they failed the test. Now, it's good to see that we are getting some support here at the 50-day moving average, just above the bottom of the gap, but still looking pretty weak. We do not want to see this continue to roll over. It needs to bounce here. You can see that the selling really accelerated on Thursday. Look at that volume. This volume is higher than it's had in a year. You've got to go all the way back to beginning of February 2022 to see volume like that. So good to see the volume pulled right back on Friday, which is good to see. So hopefully we get a bounce on this on Monday. Microsoft, that pulled back pretty hard on Thursday as well, but had that little green indecisive candle on Friday. Tesla. So interestingly, Tesla gapped up on Thursday. It had already moved, so on Wednesday it had already moved up above and closed above the 200 level. So that that was your clue that, hey, this is going to go higher. If you play this stock, you probably got long near the close, expecting a move higher the following day. You would have been rewarded with a nice little gap and go. And if you were very nimble, you probably would have got out intraday as that started to pull back. So that pullback wasn't ideal, but it pulled back to this 206 level, which is important support. However, the following day it gapped down and it kept going down, and now it's back below 200, which sort of suggests to me there's going to be some more downside. I don't think much more downside, because I got to think that there are some people who maybe didn't get in on this move and are having FOMO. And this is probably going to buy or find buyers down in this area. Maybe pulls back all the way to the 21-day moving average, but I kind of don't think so. I think that the lowest in here is probably 180. I think that after seeing this move, I think people are going to find value at 180. All right, let's look at semiconductors. They've gotten a little bit messy here. We're consolidating up here and fell out of that a little bit, but it's sort of hammerish right there, so maybe it can move back in. XLV Healthcare, the downward channel in this continues. Nice looking down channel in this. So who knows? There's a 200-day moving average here, and we kind of have three lows in here all on the line. Maybe it does find some support there. XBI Biotech, this had a fairly serious breakdown. Let's actually just zoom out a little bit to get more context. Okay, this had a fairly serious breakdown. It's now come out of this consolidation area, and now we are at a support area and a 50-day moving average. That's really got to hold this line here. XLRE REITs. Not a lot going on. Support is still holding in here. It's a defensive. We don't need to see much out of this. Staples had a nice bounce on Friday, but again, we don't need to see this doing well. It's a defensive sector. We want to see other sectors doing well. And XLU Utilities. This was actually the second best performing sector on Friday. Energy was the best performer. This, has been a little bit of a short-term downtrend. However, this pattern is really nice. Some people call this tweezers, skyscraper. It is a nice reversal pattern. We should expect to see this go higher, maybe get up through that downtrend line. But there's a bunch of moving averages overhead, so it could run into trouble on its way back up. All right, let's look at some of the stocks that we have been playing and looking at last week. HIMS is one that we've been playing for a while now. I want to go into a little bit of detail on this because this is really kind of technically extremely well behaved, kind of textbook behavior here. And if you've been following along in this, you've seen all these moves. So we had, we had our bull flag, right? It drew this pennant, had this consolidation. We broke out of it right here. This is where I think everybody entered, was right here. This is where I bought a bunch of calls. So it went up. It couldn't really move. It didn't really move off of there, right? It started to consolidate again, and that's not ideal. We would have wanted this to see move up to, say, this $9.17 level. That, it move up here, 1, 2, 3 days to get up to there. That would have been a really, really well-behaved level, or move. Really nice move. Didn't do that. Instead, it got a little indecisive, and it was starting to look a little sketchy, right? But we pulled right back to the breakout point, okay? And you can see we found some support there on those 2 days. All right, fair enough. And then we pulled back a little bit more on, I think that was Tuesday. When it opened, it pulled back a little bit, but if you extend that line that we used as the top of our pennant, you extend that across, look at, we tagged that, hit that perfectly, and bounced, and that was just above the 21-day moving average. And boy, did we bounce. Nice, strong day. It went back up to these highs. Then, as seems to be the character for this stock, we had an indecisive day after the nice day. The following day, however, we put this big gap in there. Gap and go, right? It gapped up and it kept going up. Looks fantastic. And then what's it do intraday? It starts pulling back. Well, that's kind of scary because a lot of the time when they try to, when they have a nice move like that and they pull back, you'll often see a red candle the next day. So I was watching that closely, but, we opened and basically just went straight up and closed above the high of the previous day, and we're now at all-time highs in this stock. This is fantastic. Really nice move here, well behaved with that test, and we should expect to see this continue higher. This should just continue to grind away. Sorry, I said all-time highs, but this is a high now. Oh yes, that's right, because this level was really important. Look how many times it was unable to get through there and back up. So this high we're at now, 1.5-year high, really nice to see. And we haven't done a lot of volume in this area, so that's why I'm kind of expect we could see a fairly quick move up into the 1250 area. We will have to watch out for this volume node right here, though, at around 1077. So yeah, happy with the performance of HIMS. After giving us a little bit of a scare, now we've got a nice move underway. All right, Mustang Bio. We've been watching this quite a bit. It doesn't want to break out, but it is continuing to consolidate in here, and it's starting to tighten up a little bit, which is really nice to see. I think now what we want to see is, let's consolidate in here another week. Let's get up to these highs here, and let's start getting really tight in here for the next week. Even week and a half would be fine. And if we get super tight in there and then break out, that probably gives us a really powerful move. So don't take this one off your radar. This could really go, this one. But also, don't forget, this is a biotech. It's a penny stock. We also need to be really careful and manage our risk really carefully in this one. Okay, Meta we already looked at. So yeah, if you're looking for Meta, go back a few minutes here. GNE, Energy, this one kind of annoyed me. Remember I said last weekend, if this could consolidate in here a couple more days, form a nice tight bull flag, I will buy the breakout. I said if it goes early, don't chase it. Well, that advice not to chase it is usually good advice, but wasn't the best advice in this case. However, that being said, if you did chase this, you were really, really chasing this, because this, almost the entire length of this candle, certainly the body here, happened in the first 1.5 to 2 minutes. So you had to be really quick to get in there. And if you had looked at that in the first 1.5 to 2 minutes and thought, okay, I'll wait for a pullback, you never got that pullback. It eventually continued to go up much higher and then pulled back a bit, but it's still, you would have been looking at this and going, well, holy smokes here, the breakout was 1150 and this thing is, still at 1250 now. This is a huge move. This is almost 10%. How do I buy this? Well, you buy that buy, it now sets up another bull flag. And I said on the Wednesday ticker talk, this day is Wednesday, so after the close we did our ticker talk on Wednesday. I said if we see a couple more days of the bull flag here, then we can maybe buy a breakout of this, or maybe if we even pull back more, would be awesome. You know, pull back to retest this. But you know, the consolation prize is a couple more days of bull flag, then buy a breakout, you know, down here or something. Well, we didn't get that because this thing did, you know, 2 days of consolidation, then it broke out again. So this is off the table for me unless we get a big pullback in this. So if you're playing this and watching this and it does anything interesting, let me know because I'm probably going to pull this off the radar in a couple of days. Okay, so new setups. Like I said earlier, a little weak on new setups, but there are some interesting setups. Jerry in the Discord pointed this out. This popped up on my radar as well, but I saw it when he mentioned it first. I really like what's going on here. So, you know, in the bigger context, and we've been watching this a lot, right? Because it put in this really nice cup and handle, and it also put in a bull flag here. And, you know, some of us played this bull flag. I played the bull flag, but as soon as it started to pull back here on that day, this is going to fall apart. You know, I've been burned in Boeing before, so I got out, basically break even on that. But anybody who stayed in was definitely rewarded, and it gave you another chance to get in here on this little pennant, and went up and fulfilled the target. 220 was the target off of this bull flag. Well, we've still got another target higher up for this cup and handle, and that's up in around 265. We've had this nice, reasonably tight consolidation in here for, you know, going on, I guess, getting close to a month now. Yeah, this month-long consolidation in here. And now over the last 3 days, look how tight that's gotten. And right up at the top of this consolidation. I'm going to be buying this breakout. This is not investment advice, but you know, this is a beautiful little pattern here. Even if it consolidates a couple more days, that's fine. If it doesn't, though, if it breaks out tomorrow, I'm going to be buying that, and I'll be putting my stop just below the 21-day moving average here, which is just below the just below that little 3-day consolidation. I will, of course, be trying to move my stop up as quickly as possible as this goes. I think this could go fairly quickly. You know, let's like wind our way back. Whoops, wind our way back on the chart here. Don't know why that got off of auto. Okay, cool. Yeah, you can see that once we get above this 220 level, we don't have a ton of volume, especially when we get up above, say, 235, 240. It could really start moving up into that 265. Could go fairly quickly. So that could be a decent trade. Boston Scientific is back on the radar. Remember we were watching this back in here. We liked this tight consolidation here. And then it poked its head down here, came way down, hit that 50-day moving average, went right back up, and I thought, okay, here we go. This is going to break out now. Well, it just couldn't do it. And then it pulled back, and it came out the bottom of the consolidation again, and it was right in here. I said, okay, nah, this is done. I'm done with watching this thing. Well, it went up, and, you know, it flopped around inside that consolidation again, and then eventually it broke out of there. So, you know, maybe I shouldn't have stopped watching it, but yeah, there's only so many stocks you can watch, and when it's not behaving like it should, you know, you put your focus onto other areas. But it's come back onto the radar because it broke out, and now it's pulled back in test. You know, in a way similar to how HIMS has come back and testing the breakout zone. This one is testing the breakout zone. Put in a very hammer-like candle here on Friday, right at the breakout zone and the 21-day moving average. So if you wanted to play this, and I'm probably not gonna, but if you wanted to play this, just a buy above Friday's high is how you get into that. And you know, you're playing for the move back up to all-time high and then through that. You're playing that, okay, we had a consolidation, we went up, we came back, we tested, now we're going to have a big move up. Because the next leg up, and this should easily be twice as much as this leg. Okay, so what are we looking at? 45 to 49. That's $4. Yeah, you should be able to get $8 out of this from here, which is not bad on a $45 stock, and should be a reasonably easy play for so easy for some of the less experienced traders, and maybe something you just want to practice with really small size. Okay, NVent is another one that's going to need a bit of time. This needs time to set up, but you can see how this had, it had kind of put in a bit of a consolidation. If we back way up here for context, after the IPO, it came down a little bit with COVID, of course, and you can see that this stock does like to consolidate and then break out to the upside, right? And we've put in a nice long consolidation in here, moved up a little bit, put in another nice consolidation, and it has broken higher. On earnings, okay, so they had really nice earnings. People are happy with the earnings, and you can see we've put it in a pretty much vertical flagpole, which is always good to see. And now we're putting in a really tight consolidation up here so far. It's only 2 days long, and is it going to pull a GNE and break out of this after only 2 days? I mean, I guess I'm not going to tell you not to chase this one, but obviously there is risk in chasing it. I would like to see this consolidate for 3, 4, 5 more days. Nice and tight, though. It's got to be tight. If it does that and breaks out, then we're probably going to get another really strong move higher, maybe up to 50 fairly quickly. Is a distinct possibility in this. So this is definitely worth watching, maybe even playing. If this broke out tomorrow, I don't know, maybe you got to play it. You've got to decide that. Does it suit your risk tolerance? I think it should be pretty easy where your entry and stops are in this one. So that's all I got for you for stocks today. Let's move back over here and see what we've got coming up the rest of the week. So for members of the Discord, and remember that link is down below in the description if you want to come and join us in the Discord. We do a really fun session on Wednesday. We call this the trading or the trader roundtable, and we analyze people's trades. This one does not get published publicly on YouTube. It does get published the recording gets published for members of the Discord only, because I want everybody to feel comfortable about talking about their trades. And these can be trades that worked out really nicely or trades that didn't work. And we encourage everybody to give some input into analyzing these trades and critiquing these trades in a friendly and helpful way. And so I really enjoy those sessions, and I think that people who come to them really enjoy them as well. So that's happening on Wednesday. Next Sunday, of course, we have the market briefing. Oh, you're right. We have a holiday Monday coming up on the 20th. I believe that's President's Day. So I might not post the the weekend briefing until the Monday. And then the next 2 Wednesdays after that, of course, we have Ticker Talk, as we always do on Wednesdays. So I would like to thank everybody for coming out. And if you have made it this far, you guys are heroes. So thanks for watching. Like, share, and subscribe if you don't mind. And I hope you have all enjoyed your weekend and enjoy watching the Super Bowl, which I'm going to go do right now that I finish this video. Thanks, everybody.